Hello everyone, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 15th, 2010. Now our first position for tomorrow is going to be in the March sugar futures contracts. You remember that just a few weeks ago that I had recommended buying this thing off this 28 level. We're starting to progress higher. Our triple EMA cross is now breaking to the upside. Everything looks good here for these sugar contracts to move back towards that $32 or plus. So, what we're looking at here potentially is a good trending move to the upside. We have our predicted short, medium, and long-term differences all in agreement. We have our predicted MACD above the zero line, crossing the trigger, also moving higher. And most importantly, our predicted true strength indicator we've been running flat for basically several weeks now, and we can see that it's breaking it's breaking up off the trigger to the upside and again above that zero line. We're not in overbought or oversold territory in it. Now again, we like to see the market in this type of area here where it's not overbought. It's it looks to be starting a new trend here or resuming the previous trend. We've had this big move to the downside here, a corrective move obviously. We've based out. I've drawn this line across this 25.90 area. Now it looks like this is going to break considerably higher by at least $3 or $4. So it could be a very good opportunity here. Now let's identify our key levels. 28.92, 29.36, and 30.12. This is the first, second, and third level of support. The market is above this area, so when it's above this area, we're using that as a support. So when we have the triple EMA very fresh like this, we're looking at the 3-day predicted moving average, 30.12. Now what we're going to do is we're going to go into the daily report from Vantage Point and look for confirmation. Now if this thing had been trending up for quite some time, we would be looking closer to that 18-day predicted moving average, but this is a fairly fresh trend to the upside. So we can see we've got 30.25 and 30.99 is the high. So 30.25 is the area we're going to use tomorrow. We're going to have our stops below the 28.95 area. This is the 28.92, excuse me, because that's a critical level. Now the reason we have the stop below that level, you can see that the market's moving up, it's coming down, making contact with these predicted moving averages. We want to make sure our stops are actually, in my view, we should have our stops below the 28 level because we have these two candlesticks right here that have come down. There's pretty decent support forming just at about that 28 level. So preferably that's where I would have my stops, but it's all based around percentage of account, so if you can afford to have your stops down there, that's fine. Your intraday traders, you want to use the 28.92 level. Now that's our first position. Our second position, we're going to go back into the foreign exchange market. Now what we're going to be doing here, our second position, we're going to go back again to the New Zealand US dollar. Now there's a number of reasons I like this trade. This is a trade we did last night, very successful I might add. You can see we've come up to the 75.76 area. I suggested the shorts last night in the 75.60 area. It hit that level and then basically fell all the way down to 74.92. Now we've had some very poor data out of New Zealand. We've got a potentially strengthening US dollar. Commodities are not looking the best right now, so particularly metals. So this points towards further weakness in the Kiwi. So what we're going to do is for tomorrow, we're again looking at our major indicators here. We have our key levels of resistance, 75.58, 75.20, and 75.11. You can see that we've closed the market today at 75.16. So for tomorrow, we're going to be looking at about the 75.52 area, and we're actually going to try and repeat exactly what we did today. We would like to see at least 50 or 60 pips, maybe even 80 pips on this trade, but again, it's a very volatile time of year, so we want to be very cautious. Now, looking at our major crossovers here, we're going to go in. You can see that our short-term crossover is pointing again back to the upside. Our medium-term crossover, however, is clearly pointing to the downside. Very important to point that out, and our long-term crossover remains again still in that downward motion. So now that we've identified which way we want to trade this, we want it to move high. The short-term crossover is to the upside. We're going to let this thing move higher. From there, we're going to use that to get it back into our short positions, and again basically repeat exactly what we did today. Now, looking at our highs and lows for tomorrow, we have the neural index up again. We have the predicted short-term differences are turned somewhat positive, but our medium and long-term differences are still in the negative. So 75.79 is the suggested high for tomorrow. I don't think we're going to see that. I think we're going to see about 75.50, 75.55, somewhere in that area. And once we get to that area, we want to set our shorts, and we're going to look for a move back down to the 74.68 level. So we're going to be looking for close to 100 pips on this trade tomorrow, and I think we have a good chance of getting it because Bernanke, the Fed didn't say anything today that we didn't already know, so I kind of like what's going on there. And there's a number of reasons why these commodity currencies could come under pressure. So for tomorrow, we're going to be looking to reset those shorts in the 75.55, 75.50 area, and again we would like to see a move down towards the 74.60, 74.68 area. So those are the market positions for December the 15th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.